Hello, ladies and gentlemen. Good morning to you from this part of the world. And depending on what time zone you are tuning in from, good afternoon and good evening to you all. My name is Sheriff Daramola, and I'm going to be your host this morning as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective. Happy new month, everyone, and welcome to the first trading day of the month. I think the second trading day of the month of November, and in fact, we are into a very, very important week, which is a week where we shall be knowing who's going to be the president of the United States, the 47th president, I think, 47th president of the United States. And of course, the US election is definitely going to be playing a major role in determining how market participants are going to be behaving this week. And of course, I'm looking forward to some high level of volatility. And of course, we will be taking into account all of these while we review the current market structure. So I'm very excited to have you join me this morning as we will be looking at the charts from a new perspective. Um, as always, we are going to be running on three financial instruments. As always, we will be looking at the US All Spot. And this, during the course of the weekend, I was contemplating whether to take on the go back to the GBPUSD, but after a lot of deliberation and looking at the structures, I still think that we continue with the USDJPY. So we are going to be taking the USDJPY for this week. And of course, my favorite amongst them, which is the XAUUSD. So we have three financial instruments we will be taking on this week. And I only shared publicly that for the XAUUSD. So what this means is that we are going to be doing a top-down analysis on both the US All Spot and the USDJPY. So you don't want to miss out on these ideas as we look at the chart from a technical standpoint. For those of you who are joining us for the first time, you're highly welcome on board. I'm very excited to have you join me this morning. And I know you will be wondering what this is all about. What is it that we do here on the Forex Morning Mastery? Well, this platform is educational and it's an avenue where we all come together to have a deep understanding into the behavioral patterns of market participants using price action and fundamental analysis to get a deep insight. And we do this three times in a week, that is Mondays, Wednesdays, and Fridays, 9:30 a.m. West African time, 8:30 a.m. UTC. So we deliberate on the asset. I personally trade on a weekly basis, and of course, feel free to engage in the comment section. You can ask me anything as regards to the financial market, or if you need some clarifications on whatever deliberation we're doing for that particular day. So I'm so excited to have you join me. You are very much welcome on board, and feel free to engage in the comment section. And before we begin, please give this video a thumbs up. Your likes are valuable to me, and of course, it's one way of you actually supporting this community to grow. So please click on that like button. Let's support this channel as the algorithm. The more likes we have, if we can make the likes tally with the number of people on board, the tendency for the YouTube algorithm to push the video to a wider audience of traders increases immensely. So thank you very much, guys, for your support. So with that said, here we will be diving right into the business, and as always, the first thing we normally do every morning whenever we look at the chart is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And of course, by checking on the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart. hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, since the asset we are monitoring for this week includes the US dollar, the Japanese yen, and the US oil spot, we will be focusing on economic features from both the United States and the Japanese economic docket. Now, usually we focus on high impactful event as they have a high tendency of bringing liquidity into the market. But except for days when we do not have such impactful event, we broaden our scope and include mid-tier economic features just to have a little bit of insight into what market participants are looking at for that particular day. Now, today, Monday, November 4th, there are no high impactful events to look out today, so I had to include the mid-tier economic features. And after doing that, we were able to get a couple of economic features from the United States economic docket. Now, the first one here on the list is the factory orders report from the United States. This report here is usually released on a monthly basis by the U.S. Bureau and U.S. Census Bureau, sorry. And one thing about this report is that it gives us an insight into the change in the value of new purchased orders of manufactured goods in the U.S. factory. So it's more like an inflation data sort of a thing, giving us an insight into the purchasing power in the United States. And of course, if the data comes in better than market had expected or even higher than the previous month, there is a likelihood that we could see positive traction in favor of the US dollar. Now, if we look at the previous month data here, we saw that it didn't really do very well. We had a deficit contraction in that sector. We had a deficit of 0.2%, which wasn't that really good. And consensus market participant economists are projecting that we may likely see a lesser than the previous month data, that is a more contraction in that sector. So they are suggesting a deficit of 0.4%. So we look forward to see what the actual data will be on that one. Will it be just as market had expected, below expectations, or even beyond market expectations? So for me, this is the only event I want to be looking out for today. That is the factory order. However, we need to also take into account the U.S. presidential election, though the result will be coming up tomorrow, but the election has been ongoing for about a week now, I think. And from all ramifications and from all reports we're seeing, it appears that Kamala Harris is leading with about a percentage weighing those options. So it's a very, very tight race, and it's likely going to shift market dynamic depending on whosoever is going to be winning. And one thing majority in the market and understand is that if Donald Trump wins, it's of the policy of America first, America's business first. So there is a likelihood that this could increase positive traction for the US dollar. While Kamala Harris, well, I don't want to be political in my statement, I don't want to be preferential in my statement, but there is this tendency that Donald Trump will bring much more positive traction for the US dollar. So we're going to be taking that into account too as well. Market participants will be monitoring this event, and as a result of this anticipation, we may likely see extended sideways trading activities, especially across the currency asset, where there will likely be an indecision before a sudden move will happen, maybe after that election. Then on the gold, I still think that the uncertainty surrounding the US election is favoring the gold at the moment, coupled with the geopolitical tensions in the Middle East. And for me, I still think that the path of least resistance for gold still remains to the upside. So we are going to be looking at that one too in a moment. Then on Tuesday, tomorrow, we're going to be looking at the ISM Services PMI from the United States. Now, for those of us who do not know what this is all about, well, this is a Purchase Managers Index report, and it's a monthly report, of course. And the ISM is the ISM manufacturing, okay, ISM services PMI gives us an insight into the health of the service sector in the United States. So it's an index where the rating is between 0 to 100, and anything above 50 shows that there is an expansion in that sector. And if it's below 50, it shows that there is a contraction. In fact, the service sector in the United States has been doing tremendously well on a monthly basis. For about 6 months now, we've been seeing a very good report. And if you look at this here, you will see that the previous month came in at 54.9, which is way above the 50 mark. And consensus market participants are projecting a 53.3, though a little bit lower than the previous month, but still above that 50 mark. So we look forward to see what the actual data is going to be on that one. Then another thing I would like to emphasize here is that anticipation of such event has a significant influence on how market participants will behave. So since it's a high impactful event, we may likely see major key players step aside, waiting for the outcome of that data before making any aggressive bet. And another thing I also usually mention is that major key players in the market have insiders in this department that will be releasing this report. So with an inside report, they tend to understand or know what the report is going to be like. And because of this information, they build up a position ahead of that event. And this position, as retail traders, we see them on the chart as structural patterns that we can actually use to strategically position ourselves for the next move. So that is what we are going to be doing right now. We're going into the chart to sniff through and look out for structural patterns that can make us understand how market participants are thinking, digesting information, and of course anticipating this major event. So with that said here, let's dive right into the business. I see your comment, Wokocha Kingdom, good morning to you. Tammy Klo, it's been a long time since I saw you. Good morning, trust you're doing very, very well. Glad to have you around with us this morning. And do not forget to give that video a thumbs up. I'm only seeing 2 likes and we have over 7 people on board. Please support the channel by giving that video a thumbs up. Thank you very much as you do so. So with that said, we will be diving right into the business, and as always, the first asset we normally take on is the USOILSPOT. In fact, as at this morning, I already have a buy position triggered. As we can see, the week has started on a positive note. And before we go into the technical details, let's look at the major drivers in this market. We want to weigh in the positive and the negative drivers that is likely influencing the sentiment behind the scenes. Now, the week has started on a very positive note. We saw this beautiful engulfing bullish candle on Friday, and the consolidation that started this week was more of buying pressure, especially during the Asian session. And what could be the major reason behind this renewed buying activity around the USOILSPOT, especially after that sudden pullback we saw during the second half of last week's trading session? Well, there is a latest development. The OPEC Plus had a meeting yesterday, and they decided to extend their production cut of 2.2 million barrels per day through December 2024, aiming to balance the market amidst weaker demand in crude oil and rising supply from outside groups like the US, Canada, and the like. That is, those who are outside the OPEC Plus cartel. Sorry, don't mind me using that word. Now, remember I was saying here last week that OPEC Plus is considering increasing supply as at the beginning of last week. Then during the course of the week, we saw a change in that narrative where they were considering suspending that till further notice due to the reduced demand we see in the market, which is influenced by the lower turnout from China, which is the largest importer of crude oil in the world. Then, to further make this idea of extending production cuts more valid, we saw a lot of commitment from members of the OPEC Plus who reaffirmed that their commitment to fully conform with production targets, which could add stability to the oil market. So I think with this latest development, price is likely going to be moving to the upside. Then another factor that we cannot ignore is the recent Chinese government's anticipated approval of additional stimulus measures to boost their economy. And of course, this, when China is doing something positive, buyers of crude oil see it as a positive signal, and it could push price to the upside, though we yet to know what the effect of that stimulus is going to be like. But the idea that China is going to be approving additional stimulus is a positive signal for us. Now, in as much as the path of least resistance for US oil spot is looking bullish at the moment, we cannot ignore the potentials that sellers could also come into play. Now, I told you earlier that there has been increased supply from producers outside OPEC Plus in recent times. There's a turnout of production in crude oil, which could undermine the effectiveness of production cuts by the OPEC Plus. And in our simple economics, when there is high supply, what happens? Price will definitely drop because this will exert selling pressure on oil prices. And the idea of OPEC Plus considering production cuts for us is a concern that there is a weak global oil demand at the moment. So for me, in as much as the path of least resistance remain bullish, we cannot ignore the potentials that sellers could come into play due to these factors I just stated here. Then another theme that could positively influence oil prices to the upside is the geopolitical tensions in the Middle East. We've been talking about this over a year now, and it has been one way or the other influencing the sentiment in the market positively due to concerns of oil disruption from this particular area. Now, we just learned yesterday that Iran has closed the airspace from till November 6th. So for 3 days, they are closing their airspace with the intention that there's going to be an escalation, that there's going to be an attack. And with the intelligence received from the US, the attack is likely going to happen before the US election, which is tomorrow. The release of the US election tomorrow. So there is heightened tensions in the Middle East, and this area is known to be the major supplier of crude oil in the world, and this has heightened supply disruption concerns. So for me, I still strongly believe that the path of least resistance for crude oil remains to the upside. Now, let's take a technical dissection of the chart and let's see how market participants have been digesting this information and how they are practically preparing for the new week, for the new month. Now, for us to have a deep insight into the market dynamic, we shall be starting from the higher time frame. So for this week, I'm going to be kickstarting my analysis on the 4 hours time frame, where we shall be having an holistic perspective into this particular market. So I will not be going too far away. So I will be starting my analysis from the previous month, that is since the beginning of the month of October, and that's historical data of about 4 to 5 weeks. And the first thing you would observe here is the fact that price action has been bearish since the beginning of the month of October. And when you connect the series of lower highs here, you will see that we have a beautiful descending trend line that is going to be playing a significant role in guiding our trading decisions for this week. Now, look at what happened during the second half of last week. We finally saw price action break out of that descending trend line for the first time in 4 weeks, and this for us is a beautiful signal that the trend line may no longer have the capacity to continue to negate the bullish attempt, hereby welcoming buying ideas. Now, in such scenarios where we have a strong bearish momentum, a momentum in a particular direction for about 3, 4, 5 weeks, it is always appropriate and reasonable that we wait for confirmation before jumping that reversal setup. And confirmation definitely will come in the form of price action coming back to retest the structure, which was exactly what happened on Friday. And immediately the week started, we saw an engulfing bullish candle spring out from that particular area. Now, is this the sign we're looking forward to continue the uptrend move? Well, we will be going into that detail in a moment. Then, in addition to that trend line, I have a couple of levels here that I will be using to navigate this market, one of which, and the most important one here, is our key level for the week. And you know how we use our key level. As long as price remains above the key level, we want to be looking out for buying ideas, and we will not consider selling unless the key level is breached and broken to the downside. So my key level for this week is at the $69 area. As you will see here, it shares a beautiful confluence with that descending trend line. And of course, we can see after price tested the trend line, price had continued to rise to the upside. So for me, this is a very good signal that buyers are getting stronger at this point. So with that being said, here we shall be scaling down into our execution time frame, which is the 1 hour time frame, to have a deep understanding into how market participants actually started this week. Now, when you scale down into the 1 hour time frame, you want to look out for structural patterns that will guide trading decisions for today. And after looking at it, this is what I was able to come up with. The week started at around the $69.45 level. So that is our support line for this week. Then it culminated for a while at the $70.80 area. And during the Asian session, we saw selling pressure as buyers found it difficult to break through that particular area. So for me, that was my resistant line for the week. And I was looking out for that breakout of the resistant line to continue that uptrend move. Of course, you know how we do it. Whenever we have this kind of barriers, we wait for price to break out the resistant line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. So as it is right now, I already have a buy position triggered, running with about 50 pips approximately in profit at this point in time. And for those of you who, based on your experience with me in this community, you have been able to identify the setup and capitalized on that opportunity, well done and kudos to you. So at this moment, you do want to be moving your stop losses right now, maybe to the entry point area, just to secure this position. We never can tell. Anything could happen at this point. The week is still very early, and of course the US election is ongoing. Now, at the moment, there are some of us who may some way or the other missed out on this opportunity. What do we want to be doing? How do we intend to capitalize on this uptrend scenario? So what I will just say here is that you want to be exercising patience. You want to wait for new setups to evolve before you want to continue this scenario. Now, what are the things you want to be looking out for here? Well, we already have a structure that has been broken, and that is the $70.80 level. And theoretically, when price action breaks out of such a structure, we do expect that some point in time price is likely going to come back, retest the structure in an attempt to continue that uptrend move. So if price does come back, retest that structure, it will welcome solid buying opportunities for us. So if price drops into the structure, all we just want to do is scale down into the 15 minutes time frame. It could be the 5 or 10 minutes time frame. Look out for continued buy pressure around that area. All we want to see is signs that sellers are finding it difficult to maintain momentum below that structure. Then we can continue that uptrend move. Now, it is not all the time that price action follows through this theoretical expectation. At times, price will not come back and retest, and it will just continue to climb and find new highs. And if that is going to be the case, then we have another structure here, which is the highest point for last week's trading session, and that was at the $71.40 level. So we do want to be marking that one right now, as it's going to be playing a significant role going forward. So $71.40 area, I do want to give this a different color to emphasize a different structure entirely from what we're looking at. So we have the $71.40 level. So should price not come back and retest the $70.80 area, well, the breakout retest of the $71.40 level will welcome more buying opportunities. For those of us who are already running in a position, we can maximize the potential of that bullish move. And for newcomers who are yet to capitalize on any momentum, it could be an opportunity to continue the uptrend move. So let's see how the market is going to play out from this particular area. And trust me, if there's anything new that comes up along the way, I will definitely give us an update on both my TradingView and Telegram platform. Now, sellers will be asking, what if price will drop to the downside? Which is a very, very good question. You know how we do it in this community. We always try to keep a balanced approach. The market is an uncertain environment. You might say price will go this way, and instead the market decides to go the other way. So our duty as technical traders is to ensure that we are prepared for whatever opportunity the market will bring today. So if price will go to the downside, what are the areas we are going to be looking out for selling ideas? Well, technically speaking, since we already have a key level for the week, which is at the $69 area, it is that area that we normally look out for selling ideas. However, some case scenario, we could see selling ideas even before that breakdown happened. That is when we see significant signal that sellers are gaining momentum rapidly. And for us to be able to identify this, I want us to look at the structure here from Tuesday's trading session yesterday. As you will see, the market has been very bullish, and it appears that we have some pivot lows that we can actually use to identify a trend line today. So if we bring out our line chart, I usually like using my line chart as they give me specific points of connection. So if we bring out our line chart now and connect all the pivot lows, we could have something like this to work with ahead of this week's trading session. So we have a beautiful trend line, and of course it's also going to be playing a significant role guiding our bullish idea today. So as long as price remains above the trend line, we maintain a bullish bias. But if this trend line is got broken or gets breached to the downside, then this could welcome selling ideas. So for me, if we are going to be selling before the breakdown of the $69 area, I want to see price action drop below that trend line, and not only drop below the trend line, we want to see confirmations that sellers are gaining momentum. So to give a visual representation of what I mean, I would like to see price break down the trend line. I don't know if it's going to be here or it's going to be far away around here. Depending on what happens, a retest of structure will give us confirmation that sellers are getting stronger, and then we can join the decline and then look out to add in more sell positions at the breakdown of the $69.45 level and the $69 area. I doubt if that will happen. Of course, I doubt if that will happen due to the fundamental factors we discussed earlier. The path of least resistance is looking bullish. I still think that the trend line will continue to serve as a yardstick to guide our uptrend continuation. But if it does happen that price breaks down, retest that trend line, then we have no other choice than to join a sell move. So this is my simple view on the US All Spot for today. We have a simple structure that we will be using to navigate whatever the market is going to be presented today. So I encourage us all to mark out the structures accordingly, as we will be needing them as a reference point to guide our independent trading decisions. So if you have any questions whatsoever, or you need some further clarifications, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. So stay tuned in, guys, and do not forget to give that video a thumbs up. Thank you very much, and see you in about 10-15 seconds from now. Cheers. All right. So in the absence of no questions, I want to assume that we are all on the same page. So with that said here, let's can we move on to the next asset on our watch list? Any questions? Okay, so let's move on to the next asset. I hope you've marked out these levels accordingly. You'll be needing them. So the next asset we are going to be looking at this morning is the USDJPY. That is the US dollar against the Japanese yen. And in fact, it took me a while before I finally decided to trade the USDJPY. I had a very beautiful structure on the GBPUSD as well, but after further consideration, taking into account the fundamental factors and the technical structures I was looking at the chart, I still felt more comfortable running the USDJPY one more time. So the USDJPY is what we will be looking at today, and of course we're beginning to notice some interesting development across the Asian market, which obviously is influencing the yen in one way or the other. Last week Friday we saw the yen gain some positive traction, as this was due to some events like the labor sector. We saw the NFP report come out at 12,000, way below what market had expected. Market was expecting an expansion of 113,000, but with 12,000, that was a woeful figure. And these, of course, gave the yen some opportunity to build on some momentum. And of course, the rising uncertainties around the US presidential election continues to boost demand for the yen too as well. And then we also saw last week how the Bank of Japan maintained its policy interest rate at 0.25%, providing some stability, supporting the yen in one way or the other. Remember, the yen is usually the Bank of Japan, it's usually adopted the ultra loose monetary policy. So most of the time, their interest rate is always at a deficit. But in July this year, we saw the Bank of Japan hike their interest rate to 0.25. So during the last week interest rate decision, they had to maintain it at 0.25, bringing some stability into the Japanese economy. Then we also saw we had the Bank of Japan's governor, who were there during the course of last week, we hinting at a decreasing U.S. economic risk, suggesting a possible rate hike, which could strengthen the yen. Though these are just speculations, we don't know when that will be. But this fear, and also the idea of the Bank of Japan intervening in the forex market, is also one of the major reasons why the dollar has not been performing very well in recent times against the Japanese yen. So these uncertainties may be some limiting factor for the USDJPY. So what is the path of least resistance for the Japanese yen? Well, it's still indecisive at the moment, as they also have some negative drivers behind the scenes as well. First of all, today is a public holiday. I learned that there will be a closure of the Japanese market today due to their observation of the sport holiday, that is today, and this could reduce or limit liquidity in the yen, since their market will not be opened. So potentially we could see some weakening in the yen today, and the US dollar could take advantage of that holiday to build up some short-term buying opportunity. Then there is also political and policy uncertainty ongoing in the Japanese economy due to the confusion over the Bank of Japan's policy direction following the LDP's parliamentary majority win, which of course decisions of increasing interest rate or intervening may be very, very low at this point in time, and it could exert selling pressure on the yen. Then another economic factor we saw last week was the declining manufacturing activity. We saw a drop in the Japan's manufacturing sector, that is their PMI, which dropped to 49.2 from 49.7 the previous month, giving us a sign that the manufacturing sector is contracting, and this could potentially undermine the yen strength. Then on the US front, we still have a resilient US economy at the moment, though the US non-farm payroll data reduced demand for the US dollar, and which can sometimes inversely affect the yen's relative strength. But at the moment, I will say the market is indecisive right now, and in fact we can further see signs of this just by looking at the chart throughout last week's trading session. You can see the market was oscillating between the 151.600 and the 153.600 area. The price did not really move significantly in a particular direction. So will this week bring us an edge? Are we going to finally see a breakout of either the support or the resistance of this range bound structure? Well, to answer that, let's start our analysis on the 4 hours time frame. Let's take an holistic perspective into what is going on in this market. So like I did on the USOILSPOT, my analysis will start on the 4 hours time frame. And on the 4 hours time frame, what I did here was to take into account the character of price action since the month of October, since the beginning of that month. And of course, you can see it is quite clear that the market has been on a bullish trend. And to do this, to emphasize the strength of the buyers, I have a couple of ascending trend line. We have the support of that ascending channel right there, and then we have the resistant line of the ascending channel right here. Now, something interesting happened during the second half of the month of October, where we saw price breached and broke out of the resistant line of that ascending channel. And since that moment, for about a week after that, price maintained momentum, above that structure. As we see here, price continued to find buy pressure, and not until last week we saw price drop again below the resistant line of that ascending channel, giving us signs that the yen may gain some traction anytime soon. Now, in addition to this ascending trend lines is my key level for this week, which is going to be along the 152.00 area. In fact, it lines up with my demand zone, which is situated around the 151.4 and the 152.00 area. Look at how beautifully this area had continued to negate all attempt by sellers to break through. So as soon as price drops here, we see buyers come in to push price to the upside. And in fact, the last couple of weeks, we've seen buyers continue to gain traction around this area. Now, what does this tell us about this zone? It tells us that this area you see here has a strong memory for buying power. So will this be a platform that will continue the momentum to the upside? If you would ask me, buying right away now is looking very reasonable. When you are within a demand zone, it is reasonable to risk a buy around that area and see if it's going to work out. So buying right now for me is looking reasonable at this point, and having your stop losses way below that demand zone that is around that area. So you could be looking at between 40, 30 to 60 pips of stop loss depending on where your entry point is. So at the moment, it's still looking promising to buy, except price takes out this demand zone, that is, price drops below and then continue selling pressure happen around this area before we can jump into a sell. Now, with our key level identified around the 152.00 area, we are at a critical juncture at this point. Price is within a demand zone, though within the below the resistance line of the ascending channel. Now, what we want to do now is to scale down into the 1 hour time frame so we can have a look at how the week started and how the market is reacting to this area. Don't forget, we are looking out for structural patterns that will give us an insight into what the market sentiment is saying. Now, to do this, we'll scale down into our execution time frame, which is on the 1 hour time frame. Now, on the 1 hour time frame, you will see things more clearly. As you will see, the week started on a strong bearish note, as we saw an engulfing bearish candle started at around the sorry, this is not correct here, around that psychological area at the 153.00 area. So let me just impute that one right away. So we have the 153.00 area, and we saw price drop into the 151.600 level. So I want to adjust that one too as well. So 151.600 level. So we have a resistance for the week, we have a support. So this is the resistance right here. So let me just show you, this is the resistance for this week. This is where the week started, and then we have the support line for the week at around the 151.600 area. And in fact, as soon as price tested our support line, we saw some buy pressure. In fact, we also have a hammer candle around this area, which theoretically says that buyers may still be present in this particular market. Now, with this situation here, I have noticed that sellers are finding it difficult to break through between the 152.00 and the 151.6, which for me is making this area look like a demand zone at the moment. Now, if we go to as far back as 2 weeks ago, you can see I did share this demand, right? We can see we have demand right here, demand right here. And of course, we saw what is happening this morning. So personally, I already have a buy position triggered around the 152.00 area, though it is currently running in a loss of about 10 pips thereabouts. I'm just hopeful that this will still gain some traction going forward. And if you are yet to capitalize on that one, you can place a buy stop order above the 152.00 and of course have your stop loss way below that support line at the 151.600 area, dovetailing to between 40 to 50 pips of stop loss on this one. So right now I'm still looking forward to bullish opportunity. So if price breaks above the 152, I feel much more confident. And then if price goes ahead to break out of the 153.00 area, I'll be willing to add more buy positions to my existing trade. So that is how I'm going to be managing my buy position on the USDJPY. However, in terms of selling the USDJPY, I would rather want to see price slice through the support line for this week at the 151.600 area, where continuous selling pressure below that structure or my lower time frame will give me a confirmation to sell. So that is how I'm going to be managing my USDJPY today. So I'm still hopeful. Like I said, I already have a buy position triggered, currently running in a loss of about 10 pips. So let's see how far this momentum is going to go. But if there's anything new that comes up along the line, I will definitely update us on my Telegram platform. So this is my simple view on the USDJPY for today. Let's mark the structures out on our chart, as we will be needing them as a reference point to guide our independent trading decisions today. If you have any questions, let me know in the comment section. So I will take the next 10-15 seconds off just to see if there are any questions before we move into our final asset for today. Stay tuned in. All right. So in the absence of no questions, I want to assume that we are all on the same page. So I hope you've marked out the levels accordingly. So we move on to the final asset on our watch list for today. Stay tuned in. So the final asset on my watch list for this week is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And what an interesting situation we have here this morning. I already have a couple of buy position triggered at the moment. And for those of you who are following me on both my TradingView and Telegram platform, I just gave us a peep into what structure we are going to be using to navigate this market today. And of course, we are going to be deliberating on the market dynamics further in this session. So for the XAUUSD, I did a top-down analysis on this asset, as I did share this on my public platform during the weekend. I hope you watched it. If you're yet to watch it, I encourage you to go ahead and watch those videos. I have it on my Telegram platform, my TradingView, and of course right here on the YouTube platform. So go ahead and check it, as I did a top-down analysis from the higher time frame. So in this session, we are not going to be going into the higher time frame, but instead we are going to be focusing on our execution time frame. Now, before we go into the technical details, let's really understand what is going on in this market, what has been driving the sentiment around the gold market. Now, the gold has continued to break record and fight record highs in the last couple of weeks. Last week as well, we saw price hit another record high at a 2,790-ish before that strong bearish momentum came in. We also capitalized on both the bullish and bearish momentum from last week. Now, which is peculiar with price action hitting all-time record high. Remember, we are within uncharted territory, and when price is within uncharted territory, there is this psychological expectations that the fear of missing out usually bring into the market, as majority may want to start taking some profit in the market due to the fact that they may be wondering the market may crash at any point in time, and this usually leads to choppy market conditions, retracement move, or even consolidation phase, which is exactly what we have been seeing here in the last 2-3 days or so. Now, besides this, the geopolitical tensions in the Middle East and the US presidential election risk continues to bolster appeal for safe haven assets such as gold, silver, and the like. And the expected interest rate cut from the anticipated Federal Reserve cut also supports gold by reducing the opportunity cost of holding the asset. Now, there is a large percentage of market sentiment that is leaning towards a 25 basis point cut by the Federal Reserve this week. The interest rate decision is coming up, I think, on Thursday. Is it Thursday or Wednesday? Let me see. Okay, Thursday, November 7, we are looking at the interest rate decision, and majority are considering a 25 basis point, unlike the previous 2 months ago when we had a 50 basis point cut. Well, this is not that much, and this could further support the gold commodity, further support the buying of the gold commodity, as the reduction of interest rate will definitely decrease the value of the US dollar. And if the value of the US dollar is reduced, what happens? The gold becomes cheaper for markets and investors to buy. So this is a very good plus for the gold at the moment. And based on the major analysts, big analysts in the market, there is a likely increase in ETF inflow driven by high physical deficit and an overvalued stock market, which could further influence the price of gold. Now, what do I mean by that? Well, this means that more money is expected to flow into gold-focused investment funds, known as ETF, of course. And this happens because people are concerned about government debt. Now, the US is currently at about $33 trillion debt right now, I guess. And if you look at the stock market at the moment, it appears to be overpriced, that is overvalued. And when investors are worried, they often turn to gold as a safer investment, which could increase the demand and support higher gold prices. Now, on the other side as well, the central bank has also continued to buy gold. Most of the central banks across the globe have continued to purchase gold, even slightly higher than the previous years at the moment. And this, for me, will continue to provide additional support for this commodity. So the path of bullish stand for gold still remains to the upside, and God knows how far this momentum will go. In fact, there are some quarters saying that gold may rise to as high as 2,800 or even 3,000 before the end of the year. But besides that, despite all of these positive influences for gold, we can't ignore the potential that this uptrend could be capped at any point in time. The US Treasury bond yield is doing very well at the moment, though we saw a little dip on Friday. Before Friday, the US Treasury bond yield was growing, and that dip we saw could probably be a retracement of that uptrend scenario, and this could further cap the gold commodity. You know how the US Treasury bond yield is directly proportional in value to the US dollar. So if the US Treasury bond yield is doing very well, the US dollar is expected to follow suit, and if the dollar follows suit, gold becomes expensive, much more expensive for other currency to buy. So this is one factor I think could cap the ascent of gold prices. And of course, we're still seeing that the market is still consolidating since the new week has begun, further emphasizing the level of indecision going on in the market at this point. And of course, the renewed demand for US dollar in recent time cannot be ignored as well. A stronger US dollar may continue to put downward pressure on the price of gold, like I did say, making it more expensive for holders of other currencies. So at this point in time, it is quite clear that there is an indecision going on in the market as the new week has started. Now, after taking into account all of this and looking at the chart this morning, I was able to identify a simple trading setup that we are going to be using to navigate this market today. And of course, we have a simple consolidation phase where price is confined within the 2,744 and the 2,732. That's about a six, is it? That's how many dollars? That's about $12 range bound structure, as you will see here. And whenever price action is confined within a range bound structure, it tells us that there is an uncertainty going on in the market. And of course, when we look at the economic calendar, it is what the extended sideways. The US election is ongoing. There's uncertainty around who is going to win the election. Geopolitical tension is ongoing too as well. The US dollar has its own strength. The US economy is doing very well in one way or the other. US Treasury bond yield is doing very well. And central banks are purchasing gold. So everything is all, we have contrasting views in that regard. So there is an indecision going on in the market. And of course, when we have this kind of range bound structure, what we need to do is exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, with the situation we have here, I'm still holding on to a bullish bias here, and I would not be selling unless this support line at the 2,732 level is breached and broken to the downside. So we'll continue to maintain a bullish bias here and be hopeful that price will move significantly, even breaking out of the 2,758. Then to make things a little bit more clearer, I would like to show us a structure. For those of you who watch my video on the XAUUSD, you will see it. You will have seen it. So right here on the 4 hours time frame, look at what I've got here. I have a beautiful trend line, a structure which has been respected since the beginning of the month of October. And look at where price action is right now, just exactly around that trend line, as you will see here. And since the week has begun, we've continued to see price oscillate within and around the trend line. Though we have a little bit of a breakdown, but you can see price is not going far away from that trend line. So for me, it shows that we are at a crucial juncture, and that same area also shares a confluence with that key level at the 2,740, a level which also has a memory for both buying and selling pressure in the past. So look at this. This was the platform that sent price to hit a new record at the 2,790, and price appeared to have retraced back into that area. So will this area be another platform to push price to the upside? Well, let's wait and see how the market react to that key level. Now, if selling pressure persists, and like I said on the 1 hour time frame, we already have a structure that will help us join a sell. If sell happens, we could see a short-term sell momentum back into that demand zone around the 2,710 area, which I think will dovetail to, let us see how many pips that is, a minimum of 300 to a maximum of 400 pips. But let's see how the market will play out. It's a crucial structure we have here. This is where the center of focus will be. Depending on how the market reacts to this confluence here will determine if we are going to be buying or selling for this week. But at the moment, I have a buy position trigger, a couple of buy position triggered at the moment, and I'm hopeful that price will continue to the upside. But if it doesn't, and price goes down to break the 2,730, then we'll have no choice than to join a sell from there. So to guide our decisions for this week, for the first half of this week, we have a simple setup. a range bound structure. Let's see how the market plays out. And please note that as soon as price moves significantly in your favor, you want to be moving your stop losses accordingly to secure your position, as anything could happen. We are expecting some volatility this week, so please ensure you secure whatever position you have. So this is my simple view on the XAUUSD for today. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 5-10 seconds off while I wait for your comments, if there are any, before we round off today. And please give that video a thumbs up. We've seen over 9 people, 10 people on board today, but the likes are not tallying with the number of people on board. So I really appreciate your support. Give that video a thumbs up, and thank you very much as you do so. And for those of you who had clicked on that like button, I really appreciate your support. Thank you very much. So let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. See you soon. Cheers. In the absence of no questions, I want to assume that we are all on the same page. And it's on this note we have come to the end of today's Forex Morning Mastery. We took on 3 financial instruments, of course. We took on the USOILSPOT, where we were able to identify a simple trading settlement. In fact, we are looking at buying at the moment. I did show us that I have a buy position triggered, and we also identify levels to have additional position on that one. The USDJPY is still struggling to gain some traction. We have a simple setup to guide to navigate that dynamic today. And of course, on the XAUUSD, we are looking at a potential uptrend scenario as well, but we also have levels to guide selling ideas if that is going to be the case. So I hope we all marked out the structures accordingly as we have illustrated. If you have done so, well done and kudos to you. So all we need to do right now is exercise patience and allow the structures to mature. And for those of you who are joining us for the first time, you are highly welcome on board. I'm very excited to have you join me this morning, and I hope you are able to gain 1 or 2 things from what we have discussed today. If you did, you want to be part of our subsequent editions. The next one is on Wednesday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare for the second half of the week. So it's on this note I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening. And that reminds me, we are going to be running the Go-Go Challenge today. So Go-Go Challengers, we are going to be scalping the gold market today. So I'll be with you in the next 30-40 minutes. See you there very soon. So do have a wonderful evening, everyone. Bye.